Welcome to the Bay Insider with Amanda and Ying, where we talk about history, lifestyle, and real estate in the San Francisco Bay Area.
Good morning, everyone. Welcome to the Bay Insider. And this is Ying, and I have my co-host Amanda here.
Hello.
Hello, everyone. We are going to talk about quarter one. I can't believe like the first quarter of 2025 already finished. Actually, that was 3 weeks ago, wasn't it?
Yes.
Yes. We wrapped up the first quarter of 2025. So we just want to give you an update of what has happened.
Give you some of the numbers, let you look over the charts and graphs and all of that, and give you some of our opinions.
Yeah. One thing Amanda and I were just talking about is there are a lot of information you can't really see from those numbers. And that's where we're just going to give you some of our takes on things.
Our gut feelings, right? From being in the industry and understanding.
Yeah. Because one thing you got to understand is when we report on things that's looking backwards, it doesn't really reflect what's going on today or what we think will happen in the near future. So we're hoping to give you some of that information as we talk about Q1. So let's get started looking at single family. We are looking at a 5-year comparison. Well, actually, to be precise, 6-year comparison here, 2020 to Q1 of 2025. We're looking at the median price and the price per square foot. As median price is concerned, you can see we had our official peak in 2021. I think it was the spring of 2021, right, Amanda?
Correct. And the numbers that we're looking at here, these are like annualized number, correct?
Exactly. That's for the full year, and that's aggregate for the entire San Francisco market. Obviously, depends on where you are. The numbers could be a little different, but we just want to give you an overview. So the median price in 2020 was roughly 1.6 million. The price went up to 1.8 and roughly the same for 2022. Then we took a hit in 2023, dropped all the way to 1.55. Then we had some recovery in 2024, went up to 1.625. Now this year for Q1, we are exactly the same as last year so far.
Yeah, and I think we're, in terms of going with gut feelings, I think that, I think you agree with me that we're expecting to see some kind of nominal growth, not anything crazy through the roof, but seeing the prices go up at a much kind of slower rate.
Absolutely. And, those days of double-digit growth is over. Remember the 10, 15% per year, that's no longer our reality. I think we're looking at maybe 1 or 2%, if that. We also want to just point out that in San Francisco market, Q1 generally is the most healthy quarter of the year.
Stronger inventory, stronger demand, more people out looking.
Yeah, stronger inventory. I would think the way I would describe it is there's a big gap between supply and demand in Q1. Generally, there's a shortage of inventory, lots of buyers out. So you see a lot of bidding situation going on, lots of bidding wars going on in Q1. That has been historically true other than the COVID years.
Yeah, and I think, in terms of what we've been seeing in Q1 is in the beginning, I think it's slowing down a little bit now, right?
Absolutely.
Because of tariffs and uncertainty in the market and the interest rates that people saw starting to drop, started to go back up. But in the beginning of this quarter, it was a bit of a fever pitch in terms of competition, especially
absolutely.
With single family desirable homes.
Yeah, you hear 20, 30 packages out, over 10 bids. That was happening again.
Mm-hmm. Really high price per square foot sales took place.
Yes, a lot of those sales are just shockingly high. So back to the, the hot market that we were used to. However, as we enter Q2, the inventory has picked up substantially. There are just a lot more listings on the market, and we feel that the competition is going to be far less severe. It will be much easier to get in the market for the buyers.
Yeah, and I think with San Francisco, as we've talked about before, I mean, single family homes that check all the boxes that are under 2.5 million are always going to be hot commodities.
Yes.
Because there's just a finite supply.
Yes. And we always have a shortage of good single family homes in San Francisco. As far as price per square foot, peaked in 2021 and 2022 and came down a bit and went up. Right now we're roughly $1,000 per square foot citywide.
Which is kind of a rule of thumb, I think, for a lot of people. They're going to go by that $1,000 a square foot throughout San Francisco, and then you make an adjustment based on what's your neighborhood that you're in, what's the quality of the construction of the house, how old is it, how updated is it, all of those kinds of things.
Yeah. Just to be aware, the square footage sometimes is misleading. We got to adjust for that.
Yeah, I mean, in San Francisco, because the housing stock does vary so much, I mean, you can see as little as 600 a square foot up to 2,400 a square foot.
Next
and what
to each
we're
other.
looking at here is a median, right? So we're not doing the average. We're not adding those and dividing them by the number. But we are looking at a median, which is basically, throwing a dart in the middle of that chart.
Yeah, it just helps you to understand the basic market dynamics, but not particular property.
Yeah. Take with a grain of salt.
Exactly. Don't use this number for all your calculation offers. That doesn't work. It really doesn't work. So as far as the Q2 is concerned, as of where we are today, do you have a count, like how many active listings we have compared to the previous years?
Okay, so for single family homes at the very end of Q1, beginning of Q2 here, we had 728 new listings. And that's compared with 673 new listings at the end of Q1
last year.
Yes, of last year. Sorry.
So it's more, right? So it's definitely a little bit more. So definitely inventories are coming on, and I think one thing we probably mentioned earlier is that we have a whole lot of uncertainty today compared to a couple months ago. The stock market
compared to a couple of days ago and a couple of days from now.
Exactly. The stock market is doing this up and down game all day long. That really impact the buyers' psychology or confidence level. Amanda just showed me the stock chart, which I refuse to look. Anyway.
Which, by the way, is good advice, especially in your retirements. Just don't make any rash decisions when crazy things are going on.
Yeah, that's what I tell my clients too. So if you invest in real estate, at least that's a house you live in, and it's not going anywhere anytime soon. You're not selling. So, so that's actually safer investment than the stocks.
And also another good piece of advice, because the market is fluctuating so much up and down day to day right now, if you are planning on buying a house and you do have money in the stock market, try to time, maybe you're taking the money out a little bit sooner than you need to for that eventual purchase. But if it's high, then maybe you should take some out and put it in a safe spot for that home purchase.
Exactly. Get out when it's high. Anyway, so we're moving on to a different chart. That's a condo market. We're looking at the same 6-year trends. So based on median price in 2020, we're roughly at 1.2 million. Went up a little bit in 2021. But, you can see the jump here is relatively small compared to single family homes. Stayed at 1.2 during our peak.
The drop is more significant.
It recovered a tiny bit in 2024, and then it dropped again in 2025. And that's what we have seen in our day-to-day work as well. The condo market is not healthy.
Yeah, and I think one of the things that's been a big problem for the condo market is insurance, which has been a problem for everybody. But now a lot of the bigger buildings are having issues with insurance for a number of different reasons. And they've even got, some of these condo projects on the Fannie Freddie blacklist.
Yeah.
Which is a ever-changing list at this point.
Do you know what kind of issues they had with insurance?
Well, I know some of the issues have to do with older systems, right? If they haven't had the roof replaced, if they have older piping.
Okay.
I think also there's the wildfire. And then if they have a lot of properties that are insured in a small area, right? So their exposure in that area is larger.
Right. Okay. Yeah, I mean, the price square foot also dropped from like 1,070 to 967. Now, again, I just want to emphasize this is the aggregate numbers. In reality, some pockets of the city are really, really struggling. Just based on my day-to-day observation, I have a few listings this year, condo listings, and they are so different from single family homes. The areas that we have major issues with, or what I think are bigger issues than some areas, are probably areas are heavily condo centric, like the downtown area, Nob Hill, Soma.
Soma really has been struggling for a long
time, right? Even Mission Bay. Those areas, there's a large supply of condos, but not enough demand. Another issue really hit those condos is HOAs. Mm-hmm. The HOA fees are generally really high, generally over $1,000 per unit. Doesn't matter big or small. So it's really hard for investors to even purchase those units.
I think one of the biggest challenges, like when you're talking about investors or even, just somebody buying for a place to live in with the HOAs, is not even just that they're high in price, but that they have changed over time, right? And that they get higher and
they keep on going.
Just like the uncertainty we're seeing in general, right? There's the uncertainty of what's going to happen with the insurance. Will something pop up that's a problem? Will there be litigation on the building?
Yeah.
Will, things that are outside of the control of the owner happen that are going to all of a sudden change your monthly payment to something that, puts it in an unaffordable range. So I think a lot of people are very hesitant on having that uncertainty where they have no control.
Exactly. And so overall, like there are times I see condos bought in 2016 and still selling at a loss today. So the gain over 10 years is completely wiped out for condos. Again, depends on the market. Like Noe Valley, that's more single family home like, even if it's a condo. Mm-hmm. So the behavior of Noe Valley condo might be very different from something in Soma or South Beach.
And the other thing to think of too is, like you said, you could be selling a condo at a 2016 price. So for the seller, not so great, but for someone looking to buy,
it's fantastic.
There's a lot of plans in the works in San Francisco for revitalization of the downtown area and surrounding areas. So, it could be a really good time.
It's a good opportunity for the buyers. So if you come to think about it, now people are required going back to the office. And that's what we have been hearing over and over. A lot of companies require their employees to be in the office 5 days a week. So lots of people will be moving back to downtown, South Beach, or just more central areas. So we think over time, the market will recover. But it's just going to be at a long and slow recovery process.
A leisurely pace.
A painful recovery, I will say.
Yeah, that's another way to put it.
Yeah. One more thing I do want to cover is we were talking about all condos. But if you have a great condo, those condos still sell really, really quickly. And, right as they hit market, still get multiple bids, but just a, very small percentage of them. It got to be like perfect condo.
Yeah. And parking is important.
Absolutely. Parking's become more and more important as time goes on. So the next chart we're going to look at it is transaction volume for Q1. That's just number of units sold. We can see 2020, 980. 2020 Q1 is right before or as COVID started, right? And 2021 Q1 when everyone was moving, so roughly 1,600 units, and people continue to move in 2022. and then dropped 23, 24, 25 to more of a steady kind of pace.
Yeah. No, we are moving up slightly.
We are
slowly but surely from the bottom of 2023.
23 and 24 in terms of transaction volume, right? We're higher, but historically speaking, we're probably still on the low side. So that's Q1, but let's just look at the full year. We did an estimate just based on Q1 in relationship to the full year transaction volume. Over here, that's our prediction of where we're going to end this year in terms of transaction volume. 2020, we're at 5,200, then went up a whole lot in 21, and 22 came back down. 23 and 24 are extremely low. And now we are just slightly higher than 2024.
This is a projection.
There's a projection. As you know, projections could be completely wrong. And actually, almost guaranteed it's going to be wrong.
Yeah, it definitely won't be exact. That's for sure.
No. But just give you indication of where we stand today based on Q1 numbers. So it's still a low transaction volume year. Yes. Is what we're trying to get to.
Yes.
Then the next chart we're looking at is interest rate. Take away, Amanda.
So, yeah, I mean, interest rates have been a big player in the conversation for a while now. As we all know, in 2020, things went way, way, way down to the lowest that they'd ever been, and people got used to those. And then they went way, way back up. And looking at the chart that we have on the screen now, that starts in May of 2024. And that's when, around that time we were seeing, low 7%. And even before that, we were up as high as 8%.
8%,
I think that's where we were. And then things really went down and people were feeling like, well, they're going to go down. They're going to keep going down. There was a lot of people predicting 5 or 6% by the end of the year, but that really didn't play out the way people were expecting. And it went back up and then, a little bit down and now we've gone back up again. So I think the important thing, as we've talked about before with regard to interest rate is just know that you can afford what you are buying with the interest rate that you have.
Yeah.
Don't get yourself in trouble with ARMs, because we don't know.
We don't know.
Can't say, oh, yes, it's definitely going to go down. You won't have a bump up that's going to be problematic. I mean, certainly there are circumstances where the ARM is going to be the right decision for you. But just pay attention to your finances, talk to, a financial advisor, and figure out what's going to make sense for you. And then if rates do go down and you can refinance, then great, your payment will go down.
Yeah. I mean, it just depends on your situation, I'll say. If you have a whole lot of risk tolerance, if you choose the ARM product because you want to pay down more in principal earlier on, and you have room to do that, that's completely fine. But if you qualify because ARM is lower, your cash flow is tight, then if interest rate goes up, you will be upside down quickly.
Just be cautious. Be cautious because we don't know what's going to happen, and that's become obvious.
Right? Nobody knows. Just be careful. So that's interest rate.
Yeah, and another thing, we're talking about interest rates, but I do think another thing to note, and we've talked about this in previous market updates, is about the amount of cash transactions that there are. It's 25-30%, something like that.
Do you think it's still the same? I haven't tracked.
I haven't looked at it in the data, and I don't know that the way we track the data is always 100% perfect.
Of course not.
In terms of cash transactions, and some people, sometimes they refinance into loans, but regardless, when the offers are coming in all cash, I have been noticing that those are beating out other offers a lot.
Of course.
And I think it used to be, yes, cash offers, great, it's, clean. But now people are really sellers are really looking more at that cash offer because it means an appraiser doesn't need to come into the property.
Right.
They don't need to worry as much about someone having an insurance issue. Sure, people are going to get insurance anyways, but it's not going to stop them from getting a loan, right? And those are issues that come up with a loan. So I feel like I am seeing a lot of cash offers. And from what I've been reading and talking to people, a lot of that has to do with money that's coming in from parents, right?
Yeah.
From their own properties that have done well over the years. And, some people in the tech industry having a lot of money as well. In this area.
I think creative financing actually. One of my listings I sold recently, we took the cash offer. Like you said, and my sellers say we prefer cash. And what they did, instead of bridge loan, they actually had a creative financing solution where it was cash offer upfront, no appraisal, 10-day close.
Okay.
And contact me for more details. I can't remember exactly how it was done, but it can be done. Yeah. You could do that instead of a bridge loan.
Yeah. So there are definitely things that, or taking money out from a HELOC if you have another property.
Sure.
People do that type of thing. I mean, there's a lot of types of things, but, I also have been working with a lender who is absolutely amazing, who has closed one deal in 9 days, another deal in 12 days, another deal in 14 days, and really gets the appraiser out there the next day. And so also having a lender that you're working with that can be counted on to get the deal done and be on top of it.
That is so important.
Huge difference.
Yeah.
So just make sure that, whoever you're working with is somebody that's going to help you get the deal if you're a buyer.
Yeah. So sometimes when clients ask us for a referral, we send them our best lenders. It's not because we benefit financially from those referrals. We do that because those are the best lenders. It's extremely important to have the right lender on the team. Don't you agree, Amanda?
Yeah, it's going to make everything go more smoothly. It's going to be less frustrating. I mean, when you have a bad lender or a bogged down lender, it can be incredibly frustrating for buyers.
The deal wouldn't go through.
Right.
So, I mean, I had personally experienced lenders who would tell you things, everything sounds great, and they're not able to perform. And that would just, kill the whole deal.
Yeah.
And that's very stressful for everyone around.
Right. And conversely, if you have somebody who's very smooth and gets it done and is, Monday through Friday, 9 to 5 is difficult in this business. Many bankers, that is all that you get. But the lenders I work closely with, they do take my call outside of hours.
Because we work 24/7, unfortunately. And so our deals happen, during those hours.
Just can't schedule it. Although sometimes it's not unfortunate, it's fortunate because it allows us to have a lot of flexibility in our lives.
I guess so. Anyway, so one more thing we want to mention is Zillow just came out a new announcement a couple weeks ago. We don't know enough about that yet, but the summary of the announcement is if a property was marketed as a private listing for any period of time, even for 1 day, this property will never be shown on Zillow or Zillow partner websites.
Right. So it won't syndicate out to those sites. Yeah. And so nobody would see it. And it's a little bit of shooting yourself in the foot, I would think, because if those properties stop going to those platforms, then buyers will stop going to those as a large aggregate provider of data, which is currently why a lot of people go and look at Zillow or Redfin or any of those kinds of platforms. But
however, they did for a reason, as against this private exclusive listing thing that seems to be on the rise lately. Don't you think? I mean,
I think we both agree that it is in the client's best interest, sellers, to get your property out and exposure to as many people as possible, rather than keeping them closely cloistered under your vest. There are certainly reasons why people would want to sell off market or keep things on the down low, because they don't want to have a whole bunch of people coming through their house, or they're famous, or there's very few. Yeah. That's a very, very small segment of the market.
For 95% people, of sellers, it's better to have the property exposed or fully exposed to the market. So that's what we think. And it's too early to see how this war is going to happen yet.
Yeah. And that's what I kind of equate it to is, we having all these things with the tariffs and everything. And this is kind of like a trade war, right? Where one large company is telling another one, well, if you do this, I'm going to do this. And
Correct.
if you do this, I'm going to do that. And there's a lot of retaliation going on trying to level the playing field.
Exactly.
And how it's going to end up. Nobody really knows. So
it's not a shouting match, and we don't know what's going to happen yet.
So in the interim, we will continue doing what we think is best for our clients.
Yes.
On the buy side, on the sell side, and keeping their interests front and center.
That's very important. So one last thing, Amanda. I know you don't like predictions, but would you like to offer our listeners your prediction for the year, for the rest of the year?
My prediction is that things are going to be unpredictable.
All right. Okay. All right. So I'll give you my take on that. I think overall, our market is still healthy overall. However, it really depends on the property location and just particulars. For example, single family homes in highly desirable neighborhood in a good condition will still, just fly out the shelf in a day or two. There will be multiple bids. It will be remain hot because we continue to have the supply and demand issue, and there are plenty of buyers out there with cash. On the other hand, if you have a one-bedroom condo or a studio condo in the east part of the city, where there are a lot of condos
and a lot of competition,
high HOA. Then you should be expecting a loss and maybe, many months on the market. But that's from the seller's perspective. Yeah. From the buyer's perspective, if you are buying single family homes, still be prepared for a fight. If you're buying condos, if you're ready, that's probably the best time.
Yeah. I mean, in terms of predictions, I do feel incredibly optimistic about the direction of San Francisco and the more downtown core.
Absolutely. I'm glad you mentioned that. Me too.
Yeah. I mean, I think that there's a lot of meetings that are going on. I was just reading in the Real Deal about the recent meeting that went on about the downtown core and how the businesses and companies are getting together to try to problem solve on how to make a better downtown experience for everybody. And I feel like there's just a lot of people that are working on it and that are dedicated to it. So I think in terms of predicting an investment, that some of those condos could be a good way to go.
No, the great investment. If you listen to our podcast, if you follow us, you know that we are about to release an episode on Union Square where we mentioned, there are many signs of a recovery. There are many great things going on in that part of the neighborhood. Mm-hmm. So, So
listen to that and keep an eye out for all the great things that are happening.
Yeah. And then if you have any other questions, just reach out to us. We're here.
Thank you for listening.
Thank you. Bye-bye.